The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Hope you had a good weekend. Welcome back to the show. Let's get right to work. And Jay and I in the den, if you've never been up to the northern part of the Outer Banks in North Carolina, the Kill Devil Hills and the Ducks of the world and the Corrales, do yourself a favor, go up there. It's great scenery. It's nice to know there's still places like that in the United States. Very cool spot. Taking a look at the S&Ps and what's going on with the internals, what I do a lot by choosing the S&Ps and trying to do filters a lot of times, but I kind of leave the NASDAQ sometimes. So I've got the NASDAQ checked in here right now. I kind of leave the NASDAQ alone sometimes, but we've got them checked in the filters we're getting ready to do. And what I wanted to show you, something kind of amazing. I mean, this has really kept me from even wanting to play around at all with fire on any type of short side on the S&Ps after we broke that 2101, 2105. You know, I like to come in here and just choose different custom swords. Here's breakdowns. Here is strong downtrends. Here's uptrend reversals. As you can see, choosing out of the entire S&P 500 and NASDAQ, you have a very scant population of stocks that even meet the criteria of being in any type of breakdown mode or even reversing at all yet on an intermediate and long term. So keeping that kind of in the back of my head and looking at the breadth situation, it's just, it hasn't been time to short this. I know, God, in the past, you know, a NATO partner having a attempted coup, Turkey that is, you know, would have at least cost some kind of pullback. But again, you got to kind of put all these things together and, you know, just basically say the market really doesn't care. There's, you know, the market itself may be a safety haven at this stage. I know you guys have probably had that discussed from other hosts on TFNN. The 10-year, again, a little bit of a breakdown as these things go straight to the moon here. But, you know, looking again at these custom swords, there's strong downtrend. There's 0 instruments in our custom sword called strong downtrend. Downtrend reversals. There's hardly any stocks that were in a somewhat defined downtrend, so therefore that's going to be less populated. Here's breakdowns. There's 5 stocks supposedly breaking down here. Kroger. We're going to take a look at this one. We've got a lot of earnings out this week. There's that kind of breakdown definition from being in in an uptrend. But even if you look at Kroger and you pull up the chart, we always talk about weekly takes precedence over daily, blah, blah, blah. I mean, the market relevance and the relative weakness of this stock last week, we don't have a new weekly bar printing yet. That's a little disturbing to try to be long this thing, even at the top of the box here. But, you know, this type of action last week when the market was going ballistic again, take that for what it's worth. Carnival Corp, again, these are kind of so-called breakdowns. This stock's been in a protracted downtrend for a while. I like how this is acting. I like the resistance around 45.97. You know, we talked about some stocks last week that were showing some relative weakness also, and kind of rising tides lifts all boats action. Let's see here. Looking at the den, trying to read comments. Apple, you know, the cool thing about Apple is we talked about from 98.23 to 98.64. Why was that so important? You've explored this fair auction from the upside, the downside, and back up. Markets lifted this up. We talked about waiting patiently until Apple got to this ripe area, or should I say rotten area, because it's Apple. Apples are rotten. Huh. Here we go. So taking a look at 98.64, we're there. We actually closed at, 98.78 last week, so we're in the neighborhood. We're at the top of the DMZ. What does that mean? That means we're kind of at the top of the weekly, top of the daily. This is a type of stock that, protracted downtrend, rallying up into resistance. This is kind of what you're looking for. And we pierced it and kind of pulled back on Friday, which was kind of nice. Possibly foreboding news here on the technical side. So it's a stock that I'm genuinely interested in shorting. Terry's climb Mount Mitchell, man. I haven't been up there in a while. It's the highest point on the East Coast. I don't know if last time I went up there, I was kind of shocked at all the trees that I think they were claiming acid rain on that, but I don't know how true that is. Here's IBM. Talked about this, was without question not the one to short. Crowding, got the pop. And now you got to look for pullbacks and support on this thing. I mean, when the market internals start changing and the index itself starts cracking a little bit, and I'm going to go back to our speed dials here on the market breadth, you've got a pretty serious overextended situation that happened last week. Why did that happen? Okay. Hit the wrong key there. It happened last week, but again, those aren't the most powerful things for reversals. They're just almost profit-taking mechanisms, at least. So, as we look at this, how do you use the internals now? I mean, the internals are still extremely strong as far as the technicals go, and where we look at our balanced areas on the intermediate. Here's the weekly, and with the fundamental stuff out there that seemingly continues to get shrugged off, still got to be looking at this as long and strong right now. Market did on the short term. This is our 60. Market didn't exactly, look extremely powerful in the very short term, the 60-minute. But what does this all mean? As you look at those numbers on the long term, you got to kind of back up and look at the inflection points on the long term. There's the daily. There's the weekly. Here's the 4-hour. So believe it or not, you're still looking at 2153, 54 support on this still. And as you can see, we have really, had some action on Friday getting below the profiles there, but we're kind of back within. And I use that 240 to kind of regulate things pretty regularly, if that makes sense. That's IBM. Sorry about that. Let's go back to the S&Ps on our E-signal chart. So looking at the 240s to get a better picture, these are the times when you change your position on as far as stops or going short. A lot of these 240 profiles are very powerful to use as far as picking battles, as you can see. And we had a little bit of disturbance on Friday, and now we're back within the balanced area. So the market looks still very strong. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We obviously have a ton of earnings coming out this week. We're going to take a look at a couple of them, just get a heads up. We've got some prints on Charles Schwab already. SCHW. Here's the weekly. 27.95 looks like a real print. So here's the daily. It's kind of a mixed bag on this one. I don't see a lot of leverage here. You're obviously getting above the weekly unfair highs, but we kind of have made lower highs as the market has made higher highs on the long term. This is looking at a weekly. I don't think you've got a lot of edge there, and I think they're the brokerage firms. You might have a better bang for your buck doing something else. Here's Bank of America. Looks like we've had some volatility this morning, and looks like we're pretty much on par where we closed. Here's Bank of America. This is kind of, XLF-ish, getting up into the 1385. XLF-ish, looking at, the banking ETF. I always look at the 10-year utilities, XLF, blah, blah, blah. It's not been something that has been extremely attractive, but we're going to take a look at. And so what do you do with Bank of America now? I think you've actually got an opportunity to short against 1385 with stops above. It's hard for me to get super excited about buying strong stocks in a market like this, even though I think the market's possibly going to edge higher here. You want to find stocks that are kind of raising their hand already and traveling into some high probability battle points. Let's take a look at the 10-year really quick before we get into some more earnings. And we're going to hit the XLF. So here's the 10-year. Here's where the breakdown below 132.25 happened, and then the retest. So now, I've been a huge fan of just trying to buy support here, but when the market goes considerably north, you're going to have pullbacks in this product. And I wouldn't call this a big pullback in the 10-year. Let's take a look at the XLF. So what do you do with the 10-year at this stage? I think you just got to wait. If I was a betting guy, I'm changing my tone about the other statement I always use. I'd want to wait until we got back above 132.08 to start nibbling on the long side. Again, I don't think this is over. This is the long-term weekly. You've got a profile that's edged higher. Remember, you've got a big, wide profile outputted today. You got 132.23 up top as a big inflection point. You've got 131.07, and then you got 130.06. So I'm not really doing anything until we get into one of those particular numbers. Remember, a wide profile, that POC line is going to mean a lot. Let's take a look at the XLF. All right, so here's the XLF. We kind of got up into the 2358. Well, let's take a. So what do you do with this now? In my opinion, you've got an opportunity again on the short side. You've got a sector that's showing some relative weakness. If you get any type of market pullback, you might have some opportunities here. But again, I mean, the market's just a little scary up here, seemingly with Teflon on it, and could move higher. So we could, drag some things up. But again, I think you've got a decent opportunity. If the market goes sideways, the broad market or the S&Ps, I think some of these stocks, you've got a kind of a 2-to-1 situation here. Market goes sideways. A lot of these, stocks that have shown some kind of relative weakness, not a great amount, could go down. Market comes down, these things could go down. And if the market goes up, it could drag them higher. But I like the odds on trades like that. Let's take a look at the XLE. Something that's holding up relatively well. We've got some opportunities in this one too. 68.23, getting our head back above that weekly for high and closing up there. That was pretty important. Let's take a look at gold really quick. This is something that just is terrifying, in my opinion, to go short. This is the 240, and we've obviously been edging down since we broke And as we look at what's the support now, we talked about 13.15 is big support. You've got short-term support around 13.23. So in my opinion, you've got a kind of a collection area down here between 13.15 and 13.23 on the long side. Okay, let's hit silver. Silver, I still like this silver trade. Here's where we were looking at silver the other day. It was just amazingly holding up relative to gold. 2025, you got some more support around 1961. And you got the big mama support down here at 1904. So those are the numbers on silver. So right now, what do you do with it? I think you don't have any edge here. Even on the 240s, you've got to get back above 2025, or you've got to wait till 1960, 61 happens. And our automated systems think the same way as I'm speaking right now. You don't have a lot of ways to play defense. Therefore, the risk-reward scenario is not exactly what I'd like to see. Hitting the grains really quick. Corn, you know, I think we've talked, John from Philadelphia and I have talked about this, you know, and talked about, you know, what's the next news events that are going to affect these particular products on the grain side. December corn, we talked about 352 being support here, and 370 up top being a little bit of resistance. That's the way I'm looking at it. 355 pre-market is what we're trading. I don't see a lot of leverage doing anything until at least one of those inflection points is hit. And there are some beautiful fields of grain around here. Just amazingly beautiful. Soybeans, 1034, 1035 down here. Hit that on Friday. Hit a low of 1032.5. So got into the neighborhood, bounced a little bit, but I don't like how this thing's crowding this area down here again. We could get a little bit of a flush. That could also happen to corn. And then the Custer's last stance situation down here at 1015, 1016. You got all of this in the scanner. If I go into the futures section, look at November, there's that 1015, 1016 area as you mouse over. Here's all the inflection points I just spoke of. There's a 1034, 1035. There's a 1016. And let's hit wheat. You know, this is kind of the tandem trade. A lot of times, alternative feed. You got meal, wheat, corn. 420. Really don't like how this is crowding. It's similar to corn. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're trying to get in as many of these earnings stocks as we can. Hasbro, just to give you guys a heads up if you're trying to day trade some of these things. Here's the action on Hasbro. It looks like we're printing 85 pre-market. Has been as high as 87. I don't know if that's, I guess that's a real print. So we're coming back down into, here's the long-term weekly on Hasbro. And this is why I wait to pick battles around these inflection points. Again, you know, we talk about it so many times that it's almost probably boring for you guys to continue to hear this, but it just gives me something to lean on to play defense, and that's the most important part of it. So we bounced up, and now we're kind of hovering. Get off the weekly, get off the daily. Now we're kind of coming back into this daily unfair high. So again, you know, you might have to be turning the wrench the same way on this particular stock. Market's not breaking down. Let's look at JB Hunt, JBHT. Okay. Looks like we're printing 83.50, down a little bit from the close, about 2 points. Don't see a ton of leverage here. Got a new profile trying to happen today on the daily. That'll all be in the scanner. Let's take a look at a couple of others here. We've already looked at that one, excuse me. Lennox International. Looks like we're printing 150, 156, and now we've cleared the dailies up top. Here's the weeklies. This has been a, you know, again, outperforming the Brexit pullback situation significantly. A strong stock and a strong market. And now it's off to the races again. So what do you do with it now? So printing where it's at now, you got 149 as support on Lennox International, and you're gapping up. I don't know if you need to chase this on the opening. Again, trying to let the market come to you instead of chasing it's usually a good idea. And let's look at Yahoo. This is after the close today. Here's the situation on Yahoo. Big resistance here at around 37.67 has been crowding it. Market's gone higher. This one's kind of sat still. I think obviously waiting for some news here. So if we get any type of good news, you're going to be looking at that area 37.67 as support. But again, I'm not a huge fan of rolling the dice before earnings. And who knows what's going to happen with that awesomely run company. ARTW, Artsway Manufacturing, forget it. We're not going to trade a $2 stock. Let's pull up Tesla for a second. Okay, so we've talked about the big numbers to pay attention to before. You still got this 233.37 sitting up there. You know, we've talked about this. You don't have any leverage in kind of no man's land here. So now you've got a new profile as of Friday. So you've got the bottom of a profile at 211.90, and then you've got massive resistance from 228 up to 233. That's the big inflection points on Tesla. Let's take a look at Netflix really quick. The Netflix model. Here we go. So, you know, market's been edging higher. This thing, in my opinion, you know, we talked about trying to short some against 96.18. It hasn't been that painful with a complete full-blown onslaught with the market continuing to go north. Looks like we're printing 98 pre-market. I'm a big fan of staying away from that right now. Let's take a look at IBM. IBM's after the close today. So we're still looking at 154.09 as support on this. No reason to really take it off except the fact that earnings are coming up. Rambus showed some decent relative strength lately. After the close today, trading up 1331 pre-market. You know, what do you do with this now? I think the stock, looking back in time, decently performing against the market in general and the NASDAQ. how do you trade this at this point? Again, you don't have anything to hang on to here. So as far as risk rewards and playing defense, so it's probably a good idea to just wait for that announcement. 12.19 down into 11.99 is huge support on this. And there's really not a lot up top here. Let's go back into the scanner really quick. Let's take a look at the dashboard. And we've looked at a couple of things here as far as breakdowns and how, a scan amount of stocks are even in any type of downtrend or breakdown mode. Let's look at downtrend resistance. These are stocks that are just kind of lifting up into some of these inflection points. We talked about some last week. Some of them worked out, some of them didn't. Market's not giving you a ton of help there. H&R Block, let's take a look at this one. $24.62 down into $24.34. That's the next shorting areas, in my opinion, for this particular stock. Marriott International, again, these are stocks kind of lifting up into some inflection points that have been a little sick. Marriott International, you got 70.65 to play defense against on the short side there. Macy's. I like this one. You got 34.78 to play defense on the short side against. Again, you're kind of in a stock that's in a downtrend that's just lifting its head up again. Let's take a look at Staples. Again, these are just kind of rote picks out of the scanner. Stocks that are climbing up into major inflection points. 901. Play defense against that on the short side. And again, the reason we're picking these out, downtrend resistance. Here's the kind of the guts of the program when it comes to downtrend resistance. Let's take a look at Symantec. Man, have they changed a bunch of stuff lately? Whew. That's an hour-long conversation. 21.16. We've kind of rallied up into that inflection point. This is actually a big level. Not only is it kind of a culmination of quite a few weekly unfair highs, it's just basically the recent highs across the board since October, September last year. So if we get a pop above there, some folks would have to start covering. We don't have earnings on this right now. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Taking a look at the Aussie dollar really quick. Going to move into currencies and give a heads up on some of these. Right in the middle, this is our weekly, right in the middle of a balanced area. Not a lot of leverage here. Here's the Forex section in the scanner. And if we pull up the landscape view, that's kind of where we're at as far as weeklies and dailies. Not big, wide profiles here. So, you know, the POCs aren't going to mean that much right now. I'm going to take a look at that on e-signal right now. I'm pulling up the weekly. So not a big wide profile, just pretty much an average profile. You could look at this if you have to make a trade right now. 75.69, 75.70 is support. We've kind of crossed the top of the mountain and are coming back to the peak. So again, I'm not a big fan of shorting this instrument. You know that if you've been watching this show. You've also got a POC on the daily, same place, same vicinity. So what do you do with this now? Again, I'm a lot more partial towards the long side. You've got some place to lean against here to play defense, but ultimately I do believe we're going to get back up into the 77.46 area on the Aussie dollar. Not a great high probability setup on this at this stage. Sometimes you just got to sit on your hands. This might be one of them. Here's the Japanese yen. Talked about that 105.40. This has been a really favorite trade of mine. Now you've got some new targets up top, 107, 71, 72. Not a lot of areas to play defense on this one anytime in the, on the daily or the weekly. But here's the 240s. You do have support around 104, 91, 92. I think that's what you have to be buying. And then you've got below that, you've got just a pretty wide support area down there. But 104.91, 92 is going to be the short-term number for support on this. I don't think you can just buy it up here. You can, but again, you got to figure out how you're going to orient stops always. Take a look at the euro. You guys watch the show, I've been a huge fan of this thing revisiting the 109 area. And looks like we're just kind of meandering around here. I think Europe, along with a lot of other people, which is scary. Some more shoes are going to drop over there. British pound. So here's the daily situation. The weekly, you still got a ways to go to get to any type of new inflection points. You've got a new profile attempting to appear right now, but today's Monday. That doesn't mean a lot at this state. Here's the big breakdown from before, around 133.10. So we're just kind of hovering around here. We've used the top of the profile on the daily, 130.78 as support. Again, I think, you know, you're going to be range bound at best. I don't see a massive rally happening in this particular currency. So a little bit more leveraged on the downside than anything else. You got some areas to kind of look at this as a breakdown and retest. That's the situation on the household names of the currencies. Here we go back to some stocks. And we're going to look at what's happening tomorrow really quick. IBKR. IBKR. I think half the planet's got an account with these guys. Kind of like Charles Schwab, nothing to write home here about. You do have earnings tomorrow. Supports 35.49 on this. Here's the situation on the daily. You got a little bit of a lid there, but again, I think you got to wait and see. I actually had an email about that. Let's take a look at Microsoft. All right, so last week we obviously got above 53.06. I was not a fan of this continuing to climb, but again, not a lot of pain here. What do you do with Microsoft now? Here's the daily. I think you just got to wait and see on Microsoft. I had an email about that one too. Johnson & Johnson. This is tomorrow. Let's go ahead and take a look at it. Man, this has just been nuts, huh? Whew. 123 closed last week. It looks like we're printing about 123.35 this morning. You know, I like Johnson & Johnson to buy on a pullback. 120.78 is going to be the number there. A lot of times, as you can see, these fair auctions can be explored. If the market pulls back at all, I think this thing may kind of readjust itself. It's just been in the ether up there for a while. So 120.78 is the buy point on Johnson & Johnson. Let's take a look at crude. It's the August contract. This has just been nerve-wracking around these unfair lows on the weekly. I'm going to blow this up a little bit. Kind of migrating back down below again. I think crude's kind of found its levels. I don't know if you're going to get a big move one way or the other here right now, but you do have, you know, the close back in the balanced area. Now we're just kind of hovering around it. I don't see a lot of leverage on this one right now. Let's take a look at UTX. Again, I think you've got a big wide profile here. You've got to pay attention to 107.07. I think you've got a short-term trade on the short side on UTX. I don't know if there's a real prints this morning. 104.99 on UTX. Shanghai, nothing real interesting here. We're getting up into the inflection points, the top of our weekly profiles now in the Shanghai. Don't even know why I'm mentioning that. Here we go. Let's take a look at the FTSE. So this is the situation on the FTSE now. The inflection points to pay attention to 66.61 and 65.66. So you've got a pretty thin profile that's appeared up here. We've had an incredible rally in this. So what do you do with this now? Considering that the British pound is looking like it's going to just churn around here a little bit, I think the FTSE could do the same thing. We've already explored this fair auction and come up into the top of it. I think we could pull back just a little bit on this, but again, not the non-scariest trade in the world. Okay, going back to the 30-year, I want to mention this one. This one obviously had a little bit more volatility than the 10-year. So the big wide profile on the 30-year, 171.03. That's your support on the 30-year. Looks like we're trading up this morning. Okay, I want to go back to the financial sector really quick. We got about a minute left before the next break here. So let's go into our ETF heat grid and let's look at the XLF. And we're going to take a look at some XLF stocks when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. So going back to the Aussie dollar, just do a couple of recaps here before Larry comes on. Question was about these POCs in the weekly and daily lining up. Let me go back into the scanner. You can go into the Forex section and see this. Here's the Aussie dollar. Here's our landscape view. You see those POCs right there, 75.69, 75.69, pretty much virtually at the same area. And we're, you know, I'm kind of a big fan of being long this instead of short it. So we're, yeah, what does that mean? Does that mean we have some relevance there with when 2 time frames line up on these inflection points? Yes, I'd rather see a lot bigger profile here, but I think you've got a nice pullback to look at this from, you know, a buy support situation to answer the question. And if that doesn't work, you just got to, stops are part of the game. So that's the situation on the Aussie dollar. Let's just recap a little bit here. Let's hit gold again. You've got some short-term support around 1323 as we spoke of. We're crowding. Not, it's not what you want to see. You want to see these products just get the heck away from some of these inflection points. Got a relatively wide profile here, so that inflection point is going to be a little bit more impacting than if it was thin on that 240. But here's the daily. You've got even bigger support down here at 1315. We may visit that. I'd rather kind of wait maybe for a breakdown in the 240s and just try to bang the try to buy the 1315s on gold. We haven't looked at copper in a while. I want to hit that really quick. This is something that has gotten up into our balanced area on the weekly. I like how this navigator is kind of edging up on the long term, trying to cross zero. Here's the daily, and we are at support right now. I'd like to see this thing use this as support to go higher into 232.95. I think you got a decent trading situation as far as, we've had the breakout on the dailies. You come back and retested now these unfair highs. That's the situation on copper. Let's take a look at Apple again. This is one we were looking at earlier. Just want to point this out. We're printing around 99 pre-market, so we're still within this area that we're looking at as far as noise around these weekly unfair highs. The market's climbed tremendously. This thing, it's kind of just lifted its head, hasn't eclipsed or even recent highs. So I'm looking at this as a trading opportunity on the short side. Amazon, we always look at this one. So talked about this one, being able to, again, let the market come to you. You got the weekly unfair highs around 731.50, and you've got the daily unfair lows at 732.86. So you've kind of strong stock, had a little bit of a pullback. I don't like how this has really not been participating the last couple of days with the market. We could get a little bit of a break here, and if that happens, you're going to have some people getting out of the stock. But right now, turning the rents the same way. It's a strong stock. I think you pull back to support here, and that's just as boring as it can be. Altria, taking a look at this one. Here's the weekly. Nice, strong stock. Support area is 68.23 on Altria. Guys, stay tuned for Larry and all the hosts on TFNN. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.